Well, good afternoon. Happy Friday, September 27th. Mark Milam here, your mortgage professional. Let's start with Hurricane or Tropical Storm Helene, obviously impacting the southeast of the United States. Listen, if you're in Florida, Georgia, North Carolina, South Carolina, Alabama, these have been declared disaster areas. And if you have a potential closing coming up for a real estate transaction here in the next week or so, you are likely going to need a disaster inspection. This is something lenders are going to require to make sure that the home hasn't been damaged between the time the original appraisal was done and your closing. So if you got a transaction on the horizon here in the next few days, don't be surprised if you're going to need someone to go back out and revisit the property to be sure there's no damage. Obviously, we hope all are safe and well. Let's turn our attention to economic data. A bit of a mixed bag this week. We got really low jobless claims, strength in the labor market there, high durable goods orders. Consumer sentiment obviously coming in a little bit hot as well. And then today we get personal consumption expenditures. This is the Fed's favorite measure of inflation. Actually came in at 2.2%. Listen, the target is 2%. We're almost there. Really good news though. Came in 0.3 of a percentage point below the consensus estimate. We thought it'd be around 2.5. Came in at 2.2. The core number came in right at expectations around 2.7%. So listen, the whole point of this, the Fed raising the Fed funds rate to 40-year, to combat 40-year high inflation, was to get inflation back down to 2%, and the Fed's job is almost done. We are getting very, very close to that 2% marker. And that's why we believe that come November the 7th, just after the election, the Fed is going to cut again by 0.25 of a percentage point, and then December 18th, one more time by another 0.25 point to close out the year, 1 full percentage point below the start of the year. That's great news. Let's take a quick look at mortgage-backed securities. We can see it's a bit of a mixed bag this week. Wednesday, not a very good day. Nothing real economic about this, just some poor bond auctions and then just some sentiment among investors that might be a little concerned that inflation could take back off with the Fed rate cuts. But listen, some renewed optimism about that today with personal consumption expenditures coming in below expectations. I'm closing out a week that had us in Chicago to start the week for the Loan Vision Innovation Conference. And I can't say enough great things about what Paul Loftus and his team put on there in Chicago. Just some amazing content from a great group of presenters. I'm going to pull one front and center. This is Mike Fratantoni's slide deck from the conference. He's the chief economist for the Mortgage Bankers Association, talking a little bit about home sales here. This is new and existing home sales as we move over here towards Q4 of 2024, where we are currently. And you can see this sort of shaded area that's sort of peach right here, coming up to just under 8%, represents existing home sales in the United States. And you can see we're at some pretty low levels, some levels that we just haven't seen for quite a long time. And with the exception of a little bit of a dip here around the Great Recession, we haven't seen this in the past 25 years, these anemic levels of new or of existing home sales rather. This shaded area right here is new home sales. We can see what a small percentage of the market that is as compared to the existing home sales. And this line right here is the percentage or share of the market that new home sales has. And you can see how much it's gone up really since the rise of inflation. The builders able to offer some incentives and some pricing that makes their product move a little bit better. And obviously with existing home sales, you've got everyone with the mortgage rate lockdown looking to stay put. So thought that was some interesting data. And you can see what a divergence we've experienced here in the wake of the pandemic and those record low interest rates. This line normally following the other two and then now diverging over the past couple of years. One more slide for you, talking about home price appreciation. We can see this is kind of where we are right now in that roughly 5% range. Forecast to tail off a little bit. This is because there are going to be some areas of the countries, and we all know these to traditionally be the sand states, where we might see some price correction. You know, nothing too dramatic, but certainly might see some home prices correct. But when you average it out over the entire United States and incorporate all geographic areas, not just the sand states, we are anticipating continued home price appreciation out for the next 24 months. That's from the Mortgage Bankers Association in concert with the Federal Housing Finance Administration. So some good news there for potential home buyers wanting to make sure they're making a smart investment. If I can be of any service to you over the weekend, don't hesitate to reach out. Stay safe and well. Mark.Milam at highlandmtg.com. Thanks.